give it to them. Yeah, so bros, you can see they step up 225er with really tight risk because we use tight stops, and then they step up into that. So now you have a new position if you did that, and they're stepping up. So where are they going? 3368. We still have that. And after that, we don't know. But this is a beautiful, beautiful example. I don't know if we're going to put this into the Gapper course or not. But one thing I want to show you guys is this morning when we're talking about this, when you're trading gappers, like we went through the whole list and we did our analysis. I didn't explain myself on every single one. I explained it in strat terms. But when you're looking to trade a gap in the direction of the gap, this is what we look for. So you can see, to expect it to gap and go, we need to be back through a previous range where you have a lot of liquidity, a lot of stops, or a lot of people shorts or long against wherever that gap's going. So in this case, you can see price goes up through the previous range and it speeds up as it does that. Stopping out any shorts removes liquidity. So if you look at bros on the day, it's exactly that same thing. So it gaps up. Anyone that's been short, ouch, right? Like they're gonna have to start covering. So as long as that stays green and 2 up on the 60s today, that's all happening. And since we have a magnitude of outside month, that's where your magnitude comes from. You look for that first, and then if they're really gonna stop them out and send them to Valhalla. Of course, you can go a little further than that, but notice how you got all these clustered pivots up into like just about here, like 3402. So if I was looking at this chart, I'd be thinking like, yeah, outside month / like 34. Like once we get up there, it's probably not going any further. Could it? Yeah, but today we just want to take out all the tight stop guys, or the close stop guys, I guess. Better word to say there. So if you go like this, you can see if we mark them all out. Notice it's like once you take this out, if you're holding that, next, and then once you start taking that, next, and that's where you normally get this big ramp in the highs. So that's pretty good. Now if we like compare that to lift, notice, yeah, you had the kicker. Did you trigger anyone with that? No. If you're short and your stops are here, you're fine. And when we're looking at this, it's not only the fact that people that were short before have stops on these highs. It's also the fact that people come in here today and they're like, wow, like I want to short this lower high, right? And they put their stops up here. So if someone got short at high a day and they put their stop at 1875, we would get, let's say, a reversal down here, trigger all the guys into this. And then if the buyers step up, trigger 1875. And now the shorts from high a day that are trying to put their stops at obvious pivots up here, they have to get out. So we want to be taking all those guys out, which in this case, obviously, they're just not strong enough to do it, which you can see right here. Right when this 30-15 continuity changes, we're like, all right, we don't know now. Like it's inside, so we'll see if it sets up again. But once this happens, if you're long closer to the open, you just start taking your partial. If they're really going to go on your kicker, it'll look like bros. Like it'll go on the kicker, maybe it's the 1 or 3 minute, 5 minute, but red first, flips green, and then it's gone. And you have this slight corrective in here. But we saw that inside 15 forming. So it was a 2 up, 1, and then measured move.